What's going on, guys? It's Ricky with Tech Solutions. I hope that you guys are all having an amazing Sunday. I just recorded for about 5 minutes thinking that I was hosting a live stream, but I was actually just recording. So yeah, that's how my Sunday is going so far. But without further ado, let's go ahead and just jump right into it. Welcome to our Sunday Stock Talk. For those that are not familiar, my name is Ricky. I have a little bit over 1.1 million subscribers here on YouTube. I do want to remind you that, again, I'd love to answer any questions that you might have, especially if you're someone that's just getting started as a complete beginner. You can always shoot me a direct message either via Discord or via Instagram, and that's the first or third link in the description down below. I do want to remind you there are so many fake accounts of me out there. I will never message you asking for money, and I will never message you asking to trade for you. Those are all fake accounts. I'm verified on Instagram, I'm verified on YouTube, and I'm verified on Twitter. I'm verified on Threads. There's literally fake accounts, fake emails of me, of people pretending to be me. I will never reach out to you first. So if you don't send me a direct message, I will not be sending you a direct message, just to not overcomplicate it, right? If it sounds sketchy, it most likely is. The only thing that I offer is I trade live every morning. So if you want to be able to watch me trade live as soon as tomorrow when the market opens on Monday, it's the second link in the description down below. It is a one-time payment, lifetime access, and you'll get to watch me trade live every single day. And that's the only thing that I offer. So let me go ahead and just jump right into it. If you want me to break down your top stock, please, all I literally ask you to do is to share it in the live chat. You do have to be subscribed to participate in that live chat, so just make sure that you are subscribed to the channel and you should be able to participate. Where is the NASDAQ market right now? NASDAQ market is slightly in the red, but this means nothing because the market's not open right now. And by the time the market opens at 9:30 a.m. Eastern time or 6:30 a.m. Arizona time, the market could have already fully recovered to Friday's close, right? So I'm not very concerned, although the market is slightly in the red. It's nothing too discouraging, right? As of right now, there is a 96.7% probability that the Federal Reserve is going to raise interest rates on the next FOMC meeting, or a 3.3% probability that the Federal Reserve will not be raising interest rates on the next FOMC meeting. So I just want to make sure that you're aware of that, and that's bound to happen on the 26th of July. When it comes down to this upcoming week, we have tech reporting earnings, but big tech is really next week, right? We have Tesla reporting earnings on the 19th. So for all of my Elon fanboys, I know I'm one, right? We're gonna be reporting earnings on the 19th for Tesla. So just a little heads up on that, because earnings does, when the report comes out and then there's the guidance call, right? Two different forms of catalyst for the overall market that tend to move that individual stock. But if the stock's market cap is big enough, then it could move overall indexes, and then it can move overall markets. So if you've never experienced earnings season, it happens every single quarter. It's quite interesting. Don't rush into it, right? That's the biggest tip that I can give anyone, is there should be no reason for you to try to overcomplicate as you're just getting into it. Just sit back, relax, watch the market react, and it's just a lot of fun, especially if you're just diving into this. Get your feet wet, and if you ever have any questions, I hope you can send me a DM. So let's go ahead and jump right into it. So if you want me to break down your stock, feel free to share it in the live chat, and it should be able to be popped up right on over here. Let's go ahead and while we have Tesla, why not break it down, right? So on the day chart, meaning that every candle represents a day, we could see that as of right now, we're pretty much at 52-week highs. If you look at Tesla and its overall lows, I think it's quite impressive. I know not enough people talk about it because we're kind of numb to the idea of these huge returns now. I can't say we by my experience, but I know a lot of people that, if you trade very aggressive, right? 189%. I don't know if you can see my little trend line tool here. From overall lows to overall highs in just, 7 months. This thing has gained 189% return. It's absolutely insane, right? What a great time to have been invested in Tesla at the low 100s, right? So nonetheless, regardless of what happens during earnings, according to Elon, my only concern with earnings coming up pretty soon is that Elon expected the economy to slow down, but even with that being said, I think it was 1 or 2 weeks ago that they reported that they've delivered more vehicles than what was expected. And that tends to be a positive notion, but that's probably not for the previous quarter. So we'll just have to wait and see. I always just tend to get an overreaction with Tesla. I've rarely ever seen it where it's like just break even, right? We could see here when we reported earnings last, you can see the big E, right? We gapped up quite aggressively shortly after it reported earnings. Last time we were quite overbought, so when it reported earnings, it dropped for a bit and then it began to rally, right? Now we're extremely overbought. So this is one thing that I would take into consideration, is that anytime that something is extremely overbought, especially during earnings season, it doesn't just have to beat the earnings expectation, but also the guidance for the up and coming earnings is super important. And can it further push Tesla from where we are right now? I personally don't like to predict, as no one can, right? I like to prepare. So if I begin to see that Tesla aggressively begins to skyrocket, or if Tesla aggressively begins to sell off, then I can take a long position or a short position based off of that, right? I don't have to be perfect, right? There's a very simple saying that we have within LPP, and it's, I would rather be late to a rally than early to a sell-off, just to put things into perspective. So let's go ahead and move on to the next one. So we have a handful of you guys asking about CCL, or I think it's just one person that continues to ask for it. What's going on, Rob? Hope you're having a good Sunday. So CCL, from overall lows of $6 to overall highs of $20, it looks like it's retracing back. So just on the technical standpoint, I mean, we're still above EMA, we're still above moving average. If you would have asked me when it was extremely overextended, I mean, I think the RSI and the MACD speak for itself that it tends to retrace back, but we'll see. As long as it doesn't break below the moving average, then there is no break of pattern there. As long as it forms higher highs and higher lows, again, all I necessarily want to see from a stock is signs of progress. But then when it begins to really sell off, if it finds no signs of a support, if it shows no signs of a support, then at that point you have to be asking yourself, what are you trying to catch? You know, a falling knife, right? As something is selling off, you can't expect something to find a support when there's no indication of it. At least that's what I've learned in just the past couple of years, that I've often burned myself more often than not by trying to predict the bottom of something when it could continue to sell off. So obviously we have expectations, and maybe it could find a support here, maybe it could find its support here right around that EMA, but we'll have to wait and see until things become a little bit more clear. So excited to follow up. I like that it's at least retracing. I'm sure you do too. You know, the more it sells off, the cheaper you can get it for. So again, there should be no reason that we should rush into this by any means. So let me go ahead and what that noise is. All right. Yeah. So what do you think about? Well, it's all up to you on what you think about. I mean, if your intention is to invest in it long term, I have a long term position in Amazon as well too. I opened it in the below 100s. It's something that I have no intention to sell. Let me just put this into perspective. If Amazon, you know, as it's going to be reporting earnings, I think on the 28th of July, even if Amazon were to tank to lows of 105, I will only buy more. Amazon's a type of company for me, and the way that I see it, a company that is as close to a monopoly as possible. It's kind of like Google, right? Or like Apple. I find them to be very powerful companies, or they're leaders in their niche, and it's something that anytime that it sells off, it's something that I'm very excited to buy more of. It's not something that I need to live off of right now. It's not something that I intend to make money off of. I don't need to make money off of it right now, and that's just my intention with it. If your intention is to try to make money right now with Amazon, I mean, it's had an amazing rally already. You know, I feel like you would be catching it, in my opinion, based off of recent patterns. Most likely, you'd be a little too late to the rally if it actually begins to retrace as many people expect it to. Amazon, based off of previous highs of 188 and current price points, I mean, we're still not even close to that, right? But if you look at the overall NASDAQ market's like 6% away from all-time highs. Yet Amazon is like 30%, or what is it, 40% away from all-time highs. Yeah, 41%. So again, I mean, I'm not here to tell you what you should do with your long-term plays. It's just when it comes down to my intention, I just get really excited anytime Amazon sells off, and I'm invested in Amazon. So it just, you know, people talk about long-term investments very loosely, but if it is a long-term investment, then these little pullbacks along the way should only excite you more, as it's just a greater opportunity, in my opinion, to be able to buy at a lower price point. So you let me know what you think about that. Okay, let's see, ENPH. Okay. So it looks like, Enphase Energy has been struggling. A lot of consolidation down here where, again, same resistance here right around 187, same support here right around 157. No indication of higher highs or higher lows, trading below the moving average. This is kind of like I would say a hopeful reversal. It is showing signs of consolidation, but we have no confirmation of a reversal, no confirmation of higher highs, no confirmation of this thing actually indicating signs of an uptrend. So again, sticking to the very simple criteria of I would rather be late to a rally than early to a sell-off, right? It's been selling off since the end of last year. Why would I be in a rush to get into it, right? The more it sells off, the better it is for me, the cheaper price I can get it for. I would rather set my alert and then wait for that proper confirmation because, again, I make most of my mistakes by buying early. So what can I do to change that? I can stop trying to buy early and then just wait for confirmation to be in my favor. That's the way that I would like to trade moving forward, right? That's the way that I would like to take positions. And of course, I'm not a perfect trader. I make mistakes all the time. But with that being said, it's breaking those bad habits, and I think that's one of them. So JOBY, let's go ahead and break that down. So JOBY looks extremely overbought in my opinion, and based off of recent patterns. You guys let me know. You guys let me know in the live chat. So for all those that are watching right now, what do you think about JOBY? Is it just getting started, or is it extremely overbought, right? It rallies and then it dumps. It rallies and then it dumps. It rallies and then it dumps. It went from lows of $4 to highs of 11. A lot of consolidation up here already. It looks like it would most likely dump. I mean, its overall direction is pretty bearish. I don't know what recently got announced for it to gap up from lows of 640 all the way to highs of 12 to already be pulling on back. But more often than not, and I know nothing about the fundamentals of this company, but just on the technicals, more often than not, these stocks tend to be overhyped up for a short period of time. People make a ton of money for those that lock in profits. And then guess what? Once we hear about like, oh man, this thing gapped up 400% in 2 weeks, it's about to get a second leg up. You know, at that point, if then you start hearing about it when it's already gapped up 400%, in my opinion, I've missed the rocket already, right? And I should just be okay with moving forward. So, all right. Let me go ahead and break down AAP. Again, if you want me to break down your top stock, all I literally ask you to do is to share it in that live chat. So it looks like we've been trading below the moving average, lower highs and lower lows. If you're part of my LVP team, you know this is exactly what I tried to avoid. You know, if we were talking about AAP when it was indicating signs of an uptrend, right? This would be a different story. Direction is in my favor. The analogy that I love to give, and you guys let me know down in the comment section what you think about this. The analogy that I love to give beginners is if your life depended on it, would you rather be, you know, you're a mile away from the beach, you're in the water. Do you want the currents to be against you or with you? It's still going to be challenging, right? To swim a mile for all of us, right? For all of us normies. But would you rather want the current with you or against you to try to make it back to shore? With you, right? So why, when it comes down to trading, would you want it to be any different, right? Do you want the current with you or against you? You're simply making it more challenging on yourself. Conditions are less favorable when the overall direction is against you. Of course, you know, it just sold off a lot. You think that it's about to skyrocket. That's the risk that then you will have to determine if it's worth to take. I'm not here to tell you that, right? I'm never going to put my opinions in your pocket, but all I ever want to do is to look out for a beginner, and taking risk management into consideration is super, super important. So I hope that my 2 cents can, you know, encourage you to look out for yourself, right? Let's go ahead and move on. Let's do 4 more. So if you want me to break down your stock, share it in that live chat, and I would love to break it down for you. So, all right, we got Rivian. What's going on, Renee? So Rivian stock, Rivian Automotive, based off of recent patterns, has had a nice little rally, but what are we beginning to see? All right, LPP traders, for all those that are tuning on in right now, what are we beginning to see? Signs of a resistance, right? We had a really nice rally, which is great, but you have to understand, right? There has to come a point where the rally comes to an end. And you have to be able to identify it. It's not that you're like, oh no, FOMO, right? It might still try to go, but at the end of it, it gapped up from $13 to highs of 26. That is a 100% return. Stop making it seem like it's not a lot. It's insane. And this happened in 1 week, right? I feel like a lot of us become so numb when you hear people making 1,000% and 1,500. Like, that is not normal. 100% return is insane in the market. And this happened in just a few days. So in this consolidation phase, what do you think it's showing signs of, right? When you see its overall direction has been more bearish than it has been bullish, this thing has a history of pumping up and then selling off, of pumping up and then selling off. It's not like this is out of left field. When it rallies and then the volume dies, right? Just like we're seeing the volume is dying, it tends to pull back. For me, if this thing were to break below the EMA, this might be something that I would consider to start short selling. Now, shorting is another layer of risk, right? Because technically there's no cap on how high it can go. But I talk about that a little bit more in LPP. But nonetheless, this thing is way too overbought for my taste. To me, I've missed the rally. And to me, I'm actually, I'm almost looking at this the opposite way. The 3 stages of a reversal for a potential short. We got the, confirmation of the rally, consolidation of potential rejection, and I just need to wait for confirmation of the sell-off. And then I think I might have a good short with Rivian, right? So we'll just have to wait and see. Now, Walmart, right? Let's go ahead and see where Walmart is at. Nowhere like where Target's at, right? Walmart is nearly at 52-week highs, or really at all-time highs. We're at 154.66. I wouldn't view Walmart, in my opinion, to be a stock that I would consider to day trade, especially at these overbought levels. In my opinion, Walmart is a stock that I would like to buy when it sells off aggressively due to bad news. Kind of like TGT, but TGT is going through its own struggles due to that controversial scenario that's going on right now. As of right now, TGT is still selling off. But I think it's going to be very exciting. I love following up with companies like this because, write it down in a notebook somewhere where you're going to find it maybe 2 years from now. And then right now, TGT is at $130 a share. And then I think some of us will be quite surprised. Will it make a full recovery, or is this actually the end of Target, right? To me, I think it's a short-term negative catalyst. I think it's going to be very interesting to see if something like Target actually ends up making a recovery. And from lows of 130 to highs of 159, that's literally as close to a 100% ROI if we get that confirmation. But as of right now, none of that confirmation just yet. So let's go ahead and move on to the next one. So if you want me to break down your stock, please share it in the live chat. So I see Please in McDonald's, Mickey D's. Let's go ahead and break this one down. I appreciate you taking time. McDonald's, and again, this is just my opinion, McDonald's is not a stock that I would personally want to day trade myself. It's too consistent over a long period of time, and it's not volatile enough. It's just a consistent stock that I would rather be invested in. And this is where I differentiate trading versus investing, right? With investments, I just want to buy anytime that it sells off and it's something that is bullish overall long term. I don't want to miss any of those big gap ups. I want to take advantage of the big gap downs, and overall direction should be favorable to me. As of right now, in my opinion, I just think that it's overextended, it's overbought, it's no longer a good deal, and I would like for me to wait as it gets closer to the moving average based off previous patterns. That tends to be a better time to buy. So again, just something that I will have to follow up with. As of right now, it's way too overextended for me. It's like some of my notifications are going off. I do apologize for that. Okay, let me go ahead and do 2 more. So if you want me to break down your stock, just drop a thumbs up, subscribe to the channel, and share it in that live chat. Really do appreciate you guys taking time and hanging out with me here. So we got ticker symbol DE from Austin. All right. All right. And again, you have to donate for me to break down your stock. It will not make a difference. All right, on the week chart, higher highs, higher lows. Looks like we're testing previous highs. It's just getting a little bit too overextended for me. This is Deere & Co. It looks like it's pretty bullish overall long term. Looks like it got sketchy for a little while, but kind of everything did, right? And then it went for that really strong rally. It doesn't look like it's breaking its pattern just yet. It still looks like it's going to try to work towards its previous highs of 444. But to me, downside risk versus upside potential. To me, it's just not worth it based off of my criteria, but it definitely can for you, right? If you want to get it now and you think that it's going to hit highs of 445 and that margin's worth it to you and you can accommodate that downside risk, then again, all power to you. I'm not here to discourage you. Just for my criteria, it's not my best one. So what was it? It was CFLT. I'll break it down very, very quickly. All right. Okay, so I don't trade stocks necessarily like this that are of must have been, so these are more of like a recent IPO. It peaked to highs of $95. It went to lows of $20, and now it's showing signs of resistance. This just does not meet any of my criteria because first off, it doesn't have enough history. It's not a company, first off, that I even know. Second, it looks like it's been on a strong descending pattern and then all of a sudden it begins to pop off. To me, that's just too risky. Normally, like people that I see trading this are ones that are trying to be super aggressive, and I have nothing against them. It's just not the approach that I want because of the dollar amount that I trade with. If this is working for you and you want to continue to be invested, then that's up to you. It looks like we're testing a double top here. It could potentially break out. It could potentially get rejected and then test its support at the moving average, just like as it has around $32. I just think it's going to be, for me, just too risky as up and coming earnings. Also something to take into consideration. August 2nd, that really could influence the overall direction of the stock. So to me, too risky. Recent IPO based off of what I'm seeing right here and based off of recent patterns, lower lows, lower highs. It's just too risky for me. Not something that I would trade, but I know a lot of people that would consider trading it based off of them wanting to be more aggressive with their own trading style. So it all comes down to what you are comfortable. Every time that you open a position, there's a certain amount of upside that you should take into consideration, right? That you're working towards, but you always need to take downside risk into consideration. I hope that you do that, right? If you're actually trying to be someone that does this well, in my opinion, your job is not to avoid risk. Your job is to manage it, right? So hold yourself accountable. You have to do the things that most people won't do. So wish you nothing but the best. Then, just again, doesn't meet my criteria. But just because it doesn't meet mine doesn't mean that it shouldn't meet yours. All right, let's see what is next. Let's go ahead and just do one last solid breakdown. So what are we going to get here? Again, feel free to share it in that live chat. Of course, William, thank you for your time as well. All right. Let's see if I find a good one. Let's do, I'll go through, I saw a handful of them right now. So SoFi Technologies was one of them. Looks like SoFi, based off of recent patterns, had a really nice gap up, a lot of consolidation here. Showing signs of resistance, so potential pullback coming soon. I saw someone ask me to break down BAC, so I'll break that one down very quickly. BAC, based off recent patterns, has not been going anywhere. Lower highs, lower lows overall, still trading below the moving average, a lot of consolidation, but because it's not showing signs of higher highs, then again, I don't see a reason for me to try to jump into this, especially when direction does not seem to be super clear. Just a simple criteria that I like to focus on now. JP Morgan's a little bit different. It's been more bullish, trying to return to previous highs. But a little bit more on the overbought side, but it doesn't mean that you have to buy now, right? It means that we can wait for a pullback, wait for, the deal to actually present itself, and then ask ourselves if it's actually still holding above the moving average. And if not, then we manage our risk. But as of right now, JP Morgan or Bank of America, right? It's all about your intention. If you're trying to make money right now, then it looks like direction is more favorable for JP Morgan. But if you're someone that's looking more for a good deal, it looks like Bank of America is more oversold, but oversold doesn't necessarily mean that it's going to recover anytime soon. So again, you're kind of in a pickle where at the end of it, one needs to actually indicate signs of an uptrend. The other one is already bullish, but now it's a little bit too overbought. Okay, let me go ahead. And, all right, we got the Bud Light company. Very, very low volume, so I don't trade companies that have this kind of low volume, but it looks like, again, just kind of like Target, a lot of consolidation down here, not really indicating signs of higher highs and higher lows. It's still in that consolidation phase. If you're part of the LPP team, you know what I'm talking about, where we have the rejection, consolidation. This is considered stage 2, and then when it actually begins to indicate signs of an uptrend, then that's the confirmation stage, which again, it's late to a rally versus early to a sell-off. So that's what necessarily I would look out for based off previous highs. I would set a price target right around $65. But again, no confirmation just yet. So something that I would have to follow up with to see if it's actually beginning to indicate signs of higher highs and higher lows. But again, I think it's going to be very interesting to follow up with companies like this because we're experiencing it for the first time. I mean, I feel like every generation has their own versions of this, but right now we're seeing companies obviously receive a lot of negative backlash for specific whatever the reason might be, and it hurts the company for a short period of time. But I think it's going to be interesting to see, you can be super emotional and super opinionated about like, oh my God, screw them. Like they did this, they did that. Or you can forget about all what they're doing, right? And it's just look at the numbers, right? Look at the patterns, look at the opportunity. And does it make sense to buy during a downside, right? When no one wants to buy it because of the controversial things. But at the end of the day, is it still a good company? Is it still making money? Something that we'll have to follow up with, right? I think that's going to be interesting with, Bud. I think that's going to be interesting with Target. And it's going to be those that take time to look back when those companies, if those companies actually do end up recovering, and be like, wow, next time something happens like this, I'm just going to try to better prepare. And that's the whole point of investing. It's not trying to be perfect, but understanding that you can take previous patterns and previous opportunities, reflect on them, and be like, okay, this is how I can better prepare next time. Not that it has to be exactly like that, but just so again, you're more on edge to seek those opportunities. So I really do appreciate you guys' time. I hope that you guys enjoyed this little live session. I do want to remind you, again, NASDAQ market is slightly in the red, not very significant, so it wouldn't surprise me if it opens up in the green. But again, I guess we'll just have to wait and see from when the market opens tomorrow during our live trading session. I'd love for you to tune on into our live. If you've never watched me trade live, I trade live every single morning with one group only, and that's the LPP team. It's the second link in the description down below. It's a one-time payment, lifetime access. We're running our biggest sale right now, so it's the second link in the description down below. And if you want to be able to tune on in, again, I hope to see you tomorrow at market open. I really do appreciate you guys' time. I am using the Webull trading application. If you ever want to use it yourself, it is free and available to anyone in the US, and it's going to be the fifth link in the description down below. Don't forget to shoot me a DM if you have any questions. And like always, let's make sure that we end the year on a green note. Take it easy, team.